This is a market review for January 23rd, 2025. You can see here on the daily, sorry, before I get to that, we had 8:30 news this morning, red folder 8:30 unemployment claims, I believe it was. And then Trump spoke at 11. So that's what we had today. As you can see, we did close bullish on the day. We had a very low volume day compared to the past days. If you look just at the size of the candle on this body here, it's at least half of this. And this downside wick is fairly large. Um, Still looking to take out this high for the end of the week. But on the hourly, I was bullish today because 2 o'clock London session started the move, or sorry, not started the move. AM session was bearish, right? We never, well, here's the thing. If we consider this to be a continuation of being bearish, the New York session should reverse and be bullish. But if we count this as a reversal, then we should play bullish. So either way, we should play bullish for New York session, which is what led to my bias for the day. You can see this hourly here, since it's used on the sell side and fully rejected and closed out of it. I looked, when I went back in the charts, I looked to see if price would use it at all, and it does. You can see it better on a lower time frame. So we'll get to that then. Actually, first let me put those lines back on. All right. Today was a very, as you could see on the daily time frame, it was a very slow day. It didn't move anywhere too fast or too imbalanced. It was very covered today, very balanced. And you can see that by these wicks here. If you look at this candle's wick here, fairly large, both buy and sell side. Huge sell side wick here, these wicks here as well. This candle here is a huge buy side wick, huge sell side wick, and then just a massive extension at 3. We're going down to the 15-minute. Again, we can see the London session dipped, and then we went consolidating, so bullish is coming after. Here you can just see even more. Look at the size of these wicks and the frequency of them. It's almost every candle has a huge wick. We have this 15-minute fair value gap here, which if we extend over is respected with the close of the candles. Play bullish. Lunch hit. We reversed because buy side was profitable. So lunch hits, and now we need to aim for lows. Taking out this low, dipping here back into this 1 hour inverse right here. Price turns around here as well as first presentation, which I'll get to later. Another expansion up here, algorithm kicks back in, we retrace to this 15-minute and then expand out of there for the day, or for the afternoon, I should say. It's messy. There were trades, there's always trades, but these are conditions that you don't want to trade in. And I'll get more in depth on that once we get down to the 1 minute. See anything of note on the 5-minute. This fair value gap here, we extend it over, it's within the 1 hour, so those two combined make it a likely place for it to reverse and continue playing bullish for the day. Take out this high, algorithm kicks back in, new day opening gap, reaction, retrace to this 15-minute. There's also an inverse here, but it's not validated on the sell side, so I don't like it as much. And then use this 5-minute as an expansion for the last hour. Now on the 1 minute, we have let's get to the trade that I took first. S&T of lows. This consolidation to me was prime for quick move on a normal day. This accumulation here, I thought this sweep of these lows was manipulation, especially since it didn't happen on ES. Saw that S&T, saw this expansion, was waiting for a fair value gap to form. Nothing did. First one here, first presentation, expanded. I entered not when it came down here because I think I was busy, but once it expanded above, I think I got it when it came back down right there. Not entirely sure. But as you can see, one. So here's the thing. These were not ideal conditions to trade in. Obviously not. I mean, just look at it. But there were things that should have told me not to trade. If we look here, from 9 to 9:30, this doesn't look clean. I mean, price moves, but look how covered it is. No gaps, no respecting any gaps, because there are none. The only one that's here is this and this, right? So we just meander, no gaps, nothing to respect. And then if we look at all this, we need a substantial move. I should have waited for a substantial move before feeling comfortable about taking a trade. So what does me telling you from 9 to 9:30 do anything? I have found out that from 9 to 9:30, the behavior of price can help you tell how the opening range is going to be. Since we didn't really go anywhere here and nothing was acting too clean, you can expect the opening range to do that as well. Not be very clean, not be very expansive. And we can see that here. I mean, if we look, boom, this is 10 o'clock. There's two gaps in this whole thing. I should have at least waited for the macro. And if the macro had come, I would not have entered at all because, well, there's not much to go off of. Now, I think the reason I did enter was because I told myself, I think it's been all of January and a lot of December of last year as well. I'm predicting the days right. I'm predicting where the market goes like 90% of the time during the day. But I never trusted myself enough to click the button, or in my case, set a limit order. So I told myself that I should start doing it because if I win as much as I win in my mind without actually taking the trade, then losses like this are okay. Like this isn't yesterday are okay. Another thing that I actually did today was I saved some of my capital. I think my stop loss was below here, and the closure of this candle outside of the first presentation got me out. The reason that it's here is because, well, obviously I had to wait for it to close and things like that. So that was the trade. It was a loss. Could have been avoided, but I wanted to take more trades because I frankly don't think I take enough. So, obviously if you're doing that, things are going to happen. But I'm hoping to learn from experience that way. Opening range, not much happening. Macro, not much happening either, but it does start this bullish move. We do see an S&T of these lows here, followed by an expansive candle and an a buy side imbalance, sell side inefficiency getting filled. At this point, I think I stopped looking at the market. I mean, I saw this. You should stop looking at it. I saw this. I mean, all this within, what, 50 points? No thanks. Even if it moves, I'm not in it. Plus, I already took a trade. But that just goes to show you, my model works. You just need to have the experience to know when and what direction to play it. Easy. So S&T, fair value gap expansion. I if I took this not first presentation, midway point of the opening range gap would have been a good profit, a good final profit. Would have hit. Then we consolidate, wait for lunch. Lunch starts by ripping up, taking out these highs, taking out these highs as well. And then we head lower because buy side was profitable AM session, aiming for lows for PM session. And this is the one we end up hitting. It's the first low that was created after 10, I think it is. Yeah. So we do that, we aim for that, take it, turn around at this 1 hour inverse here, but with this white box, and this 5-minute fair value gap as well. We then expand off of that all the way up until the algorithm kicks back in. We get an SMT of these highs here, and then price is a little odd here. If I entered here with this fair value gap, my stop would have had to been all the way up here to allow price to come into here. So knowing me, that probably would have been a little too large for my liking because profit would have to be all the way down here. And again, I was bullish on the day. So price did end up, looks like bodies closed at constant encroachment of this wick, retraced up to constant encroachment of this sell side imbalance, buy side inefficiency, taking off to the lower end of yesterday's first presentation, and this 15-minute reacted off that, retraced, reacted off this 5-minute, and then the last hour, the last macro, pumped. It pumped to not take out a specific high, but a couple of these just worked towards this. Yeah, I mean, there were definitely trades to be taken today. There were. Sadly, AM session was not the prime candidate for them. It's okay. Things happen. And it's my job to not only predict the good times in the market, but also the bad. I should have noticed this and said, hey, it's not acting nice. Maybe I should wait until PM session or not trade today. But my bias was right anyways, which is good because what did I say earlier? I said for my model to work, you need experience and you need, no, I said the bias, which comes from the experience, and you need time. And I had one of those right. And time, the time when to take the trades will come with practice, seeing different market conditions, just being in the markets really. So if we zoom out to higher time frame, this is where we are in the week. We started here. So this is our sell side wick for the week, and we're all the way up here. I still like this high. I like this high for the week. I think Friday could do some work. We've already opened for the night and Asian in London. I like this fair value up here. I think we might drag down there. And if London session, here's what I put my money on right now. London session is going to reverse. And then New York session, we're going to start out bearish to trip in people. And then we're going to play bullish to take out this high. But of course, this high. And definitely 2 out of reach here. But I think we'll definitely get this one. Actually, maybe not. If we look at the weekly range, wrong way. If we go for TGIF, we should see a retrace to at least 20%. Now, if that happens during the London session, I'd be okay playing bullish. honestly not entirely too sure what to make of this. If we do retrace to 20 to 30% during a London session, price might still have a leg up for New York, but it might also just consolidate like today. Again, it all depends on what happens overnight. So let me mark down these numbers so that I don't have to have like 4 of these things on my chart. 21, 950, 25, and 21, 878.75. And this right here is 20% and 30%. Alright. This has been a market review for January 23rd, 2025, and I'll see you guys tomorrow.